Hello, everyone. I'm going to speak a little bit about the work that constitutes my thesis. My thesis is titled Essays on Bank Fintech in India. Let's talk a little bit about the story of fintech in India. If you look at the graph on the left, you can see that fintech credit in India has been expanding at a rapid pace. However, this graph is not updated. So, to look at some recent figures, now India's fintech market was valued at around 689 billion USD in 2023 and is projected to reach around 2.1 trillion USD by 2030. This should show you how much value India's fintech market actually has. On top of that, India and China tie for the highest fintech adoption rate of 87%. Now, some common Indian fintech firms that you may all be familiar with are like Cred, MoneyTap, Razorpay, so on. Now, what exactly is fintech? The most commonly accepted definition is the Financial Stability Board's definition, both in academia as well as practice, which says technologically enabled innovation in financial services that could result in new business models, applications, processes, or products with an associated material effect on financial markets and institutions in the provision of financial services. While this definition is good at capturing what fintech is, it is still quite a large definition. So, for a smaller definition, we can say fintech is a new financial industry that applies technology to improve financial services. However, though we agree to both these definitions of financial technology, since our point is to capture banks' usage and adoption of technology, we term that as bank fintech. Uh, let's talk a little bit about the studies that initially existed in under this area. The initial studies talked about whether banks and fintech companies might either compete with each other or collaborate with each other. However, as more and more banks started internalizing adoption in technology, this gave rise to new kind of studies which looked at whether when a bank adopts technology, does it help the bank give more credit, manage risk, or improve performance. However, we still don't know how when a bank like adopts technology, does it affect bank customer relationships, jobs within the banking sector, whether it works along with other factors such as bank boards. We also don't know what effect it has on the central bank's monetary policy. So, this forms the basis of the thesis, which bank fintech acting as a common underlying factor, and we see the effects on various aspects of the banking sector, like I mentioned before. Now, the first essay speaks about fintech adoption and relationship lending in banks. The question is that does fintech affect relationship lending? Relationship lending is something that banks indulge in where they give their clients better terms in terms of greater lending or lower interest rates based on the relationship that they have with them. So, what I do is I construct a bank fintech score using textual analysis because there's lack of actual data in this area. And then I test whether it has an association with relationship lending. Now, what I find is that if a bank is a relationship lender, it uses this fintech to strengthen relationship lending or do more of relationship lending. However, if a bank is a transactional lender or somebody who does lending based on hard information or numbers, hard numbers, then they use this fintech to do more of transactional lending or less of relationship lending. So, what this means is that banks can use fintech to strengthen relationship lending if it identifies the fact that it is a relationship lender. It can actually use it to further strengthen relationship lending by maybe giving out more personalized products and being able to cater to the needs of the firm better. Now, the second essay looks at whether board size influences how banks benefit from fintech adoption. So here also I measure bank fintech using the textual analysis which I mentioned before. Um, I also look at how board size in tandem with bank fintech affects performance. And I find that fintech adoption on its own improves performance. Larger boards also on its own improve performance, but when they act together, they have a negative impact on performance. What does this mean? That boards beyond a certain number tend to reduce the benefit that fintech provides and then in turn reduces performance. So this means that very large boards might actually slow decision making and they can actually limit the bank's ability to fully leverage fintech initiatives. Now, in my third essay, I look at how fintech adoption affects employment within the Indian banking sector. Here, instead of the fintech score, which is based on counting the number of fintech words in the annual report, um, I go on to see a sentiment score, which basically looks at what not just the presence of these buds, but how are banks talking about it, whether it's positive, negative, or neutral. And I find that banks which have a small positive sentiment towards fintech also tend to have lower employees, but at the same time, they also tend to have greater employee productivity. So, this gives some credence to the idea of technology related job losses in the banking sector. Now, in my fourth essay, I look at whether fintech adoption affects how banks respond to monetary policy changes. Now, I use the bank fintech sentiment that I mentioned about previously, and I look at whether it affects monetary policy changes in the sense that when the central bank actually makes a change in the policy rate, how it transmits to the other individual banks is the monetary policy transmission mechanism. So it does individual banks change their rates, increase lending, all this is part of the transmission mechanism. So find that fintech actually improves the efficiency of monetary transmission mechanism. So that means when a central bank actually increases rates, this increase is transmitted to individual banks, and banks which have more fintech is able to do this more effectively. And also, there's also a shift from long term to short term lending in the presence of a rate change. um, and banks which have more fintech, there's a shift towards short term lending. And we also find that this effect is quite strong for larger and much more financially stronger banks, which indicates that like scale and financial strength also has to play a role. Thank you. I would also like to thank my research advisory committee, Professor Rudra Sen Sharma, Chair, Professor Mridul Sagar, Area Member, and Professor Ekta Sikarwar, my cross area member, for their constant guidance, support, and feedback, by which I have been able to reach the end of my dissertation. Also, I would like to thank my thesis examination committee, Professor Subhashish De Chair, Professor Jaydev, and Professor Eric Brisker, who are the other examiners, for their guidance and comments, which have actually improved the quality of my thesis. Thank you.